Alrighty, what is going on, ladies and gentlemen? Welcome to another breakdown video. My name is Sam, and today we're going to be going over the inflation report or the CPI report for Tuesday, February 13th. So let's get into this. We can actually go over a couple of different pairs for this as well, just because CPI is obviously going to have a major impact on a lot of different pairs. But let's first start off before we get into anything on the chart with Forex Factory, right? Because we want to look at the data, we want to kind of understand the data, and I want to give you guys a couple of different scenarios as well, so that way we can be fluid in the market, right? I think it's important that we can go through what could happen, regardless of what we may think may happen, right? So let's first start off, right? So you have your month over month. Well, let's first start off with CPI, right? Very simple. It's the change in price of goods and services purchased by consumers, as you can see right here. It accounts for the overall inflation, right? So this is the inflation report. Inflation is a hot topic right now, obviously because of all of the money printing that happened over the last couple of years. And right now, inflation is a big battle inside of the United States with you have rising costs for just about everything. So the goal of the Fed is to get the inflation. Right now we're at a 3.4% inflation rate. The goal is to get it back down to a 2% or just around that area. Okay, and so now that we've got this out of the way, what CPI is, what do these numbers mean, right? So this 2.9, 3.4, the core CPI and the CPI month over month, these month over month ones, they're not as important as the year over year, obviously. Just think of it as like your candles. Your 1 hour time frame is going to hold more confluence than your 15-minute, right? Because it's just a higher time frame. You have more data within that time frame. So within this year over year, this is going to hold the most weight, just to get that out of the way, first of all. But what does this mean, right? So let's just say, so what is the target? The forecast for tomorrow is 2.9%. So this is how you want to look at this. So CPI forecast equals 2.9%, right? So if the forecast is 2.9%, what could we see here, right? So if it comes out at 2.9%, obviously, right at the expected number, then you're gonna see price action usually just continue, usually whatever it tends to be doing, right? And if we go off of our daily bias, we would be bearish. So just to say for gold. So for example, 2.9, no change, price moves as expected, right? So what if we see a 3.0 or higher? What does this mean, right? And so if you see a 3.0 or higher, that means the Fed must maintain their monetary policy to keep the rates higher for longer, right? Interest rates, right? Because if inflation is still up, right, they obviously going to have to keep the central bank interest rates higher up to combat inflation for longer, right? And so if the rates, we'll do this, Fed must maintain their monetary policy. Why? To combat inflation, right? And so to combat inflation, if they're going to keep the monetary policy high, it makes it less favorable to purchase gold. You'll see gold move down, right? So this would be our bearish if we see a 3.0 or higher. And then we'll put bearish. Now, obviously, if you see a 2.8 or yeah, 2.8, yeah, or lower, then you'll see gold bulls, right? And for the reason for that is on the anticipation that central bank interest rates are expected to come down sooner than later, right? So if that means if inflation is coming down as expected, boom, the market's going to move based off of expectations, right? Not things like actually happening. So if you see inflation is coming down, and we're seeing these lower numbers than even lower than they're expecting, right? Because they're expecting it to come down from 3.4, right? So it would make sense if we seen like 3.2, but it's still not as much as they were expecting. So, but if we get that 2.8, then that's like them saying like, hey, the Fed is ready. This is exactly what they need to be able to cut the central bank interest rates and make it more favorable for your large institutions and yada yada to purchase into these assets like gold, stocks, etc. So for gold and etc., or for gold, not etc., gold, NAS, US 30, this is gonna be all the same here, right? And then for your, so basically all of your pairs that end in USD, you can follow this for your CPI forecast. Now, if they start with USD, it would be the opposite. And so, yeah, that is how you're gonna read these numbers and understand this, right? So now let's get into what I personally believe is going to happen tomorrow, right? And now I am no financial advisor. However, I just want to, you guys know me. You want my prediction, obviously. So, uh, we'll give you that. So let's get into it real quick. So now that we've gone through all of the scenarios, and so that way you can understand all the things that could happen based off of what the actual may come out to be for this yearly CPI year over year. Now, what do I think is going to happen, right? So I personally think that we're going to see something between this 2.9 and 3.4%, right? So this will give us those green numbers to bring these bears for gold and that, etc., right? And why do I believe this? So if we just kind of look at the trend for inflation over the last couple months, basically since July, we've been kind of stuck around this area, right? And if we look over the last 2 months specifically, we've seen an increase. So what do I think will happen here? They have a very high expectation here of 2.9%. This is very, like, I think this is it's a long shot. But because of this 2.9 forecast, if it does come out at like 3.1, 3.2, something like that, then yeah, obviously this is going to bring the gold bears for this region, right? Because um, the Feds are going to maintain their monetary policy of keeping the rates higher for longer, right? Obviously, combat inflation, bring bears. And that is as far as the forex factory goes, right? And also they haven't done anything. They haven't hiked the rates, so um, they're just we're kind of just in a spot right now where we're maintaining because they don't want to hike the rates too much and put us into a recession. Um, but at the same time, they don't want to cut them too soon and see inflation resurge back up to the highs, right? So this is what the economy is challenged with right now. Yeah, I think we'll see some gold bears, especially like, if we kind of just go and do our technical analysis, we have our daily closure, we got a closure below here. Weekly time frame, previous week was bearish. This would line up with everything we were just talking about here as well. Monthly time frame as well. We made our top wick. We're starting to push down now. I'm a little bit more better with gold than all the other pairs, so let's go a little bit more in depth from right now. It looks like gold's just going to start to pull back, right? So very typical for a day like this on CPI, right? So you got this previous support here on the daily time frame. If you go to the 1 hour, same thing. You're going to draw it up into here. I wouldn't be shocked if we see a move kind of just back up into here. And then like, I don't know, London session, you might see your first little spike off of there, and then it might pull back or something like that. And then that would be that 5 a.m. top wick, and then towards like obviously the 8:30, 8 a.m. New York, you'll start to see if we start to see some sort of resistance or something, I think that gold could move down from here with the CPI, right? And that's kind of like what this looks like right now at this turn time for me. We'll see what happens, obviously. Who knows? We might even go a little deeper and drop up in here. But like if we do get breaks above this area and these wicks here, I would wait to see how much further it's gonna move up because it definitely will, with gold. So that's what I believe will happen for gold. I think that we're gonna pull back up into like 2025s and then we'll see what happens for the day. Um, US 30, or we'll start with NASDAQ, right? So let's look at NASDAQ. So yeah, NASDAQ, same deal, right? So you have that same exact um bearish bias on the daily time frame. You had a nice bearish candle, boom, nice strong body with a rejection wick on the top. Makes sense for Nasdaq to come down at least into like this previous resistance in here, right? So that's what I'm looking to see for Nasdaq as well. Obviously, we'll have to wait and see. US 30. Now, I will say US 30 on the daily was bullish. However, if you go to the 4-hour time frame and this is a resistance, I haven't looked. What do you know? So, I think maybe US 30, you could get something from here towards 830 with CPI. Nah, I'm not saying well, we'll see. This is where I think it would melt from, for example, if we were to bleed. Right. And so this is the final thing. This is another thing that I think is super important that sometimes could be overlooked is, and this is just the US dollar index, right? What is the sentiment for just the dollar for the day, right? Like you can't trade this thing. It's just the dollar. Um, but look what happened here on our daily time frame, right? We closed bullish. We're respecting this support we've been at for a couple of days now. We've formed a range here on your 4-hour time frame. Wouldn't be surprised. You also have a weekly bullish candle here with a wick to fill. We broke the lows. So if you understand the pack runner concept a little bit, you have volume behind this candle now to shoot up. And that would kind of make sense here since this previous weekly candle didn't really have a bottom wick, and we've been also ultimately just kind of bullish on the dollar, waiting for. Yeah. This is all boot camp stuff, so we can't talk too much about it. But yeah, so obviously, if we have higher rates, that's going to cut down the supply of the dollar, and in turn, it's going to make it more rare, quote unquote. Because if you have a lower supply of something, it's more rare, and you're going to see the value of it increase, right? So that's why you see the dollar move up here. But that is going to be the basis and pretty much everything. This was a little bit longer of a CPI video just because I wanted to get all of this out of the way as well. I don't know, we might not do this for every single video because especially if a lot of you can watch this one here and understand this from the jump. But that's going to be it for me. We'll see how this ends up playing out over the next couple 12 hours and so. But that's going to be it for me. I hope everyone has a good rest of their day. And yeah, let's see how this plays out.